the important question that why we need a new partner. So you can see here, there is 4 points written. The first point is additional capital required. Okay, so whenever we start a business, sometime we have enough capital, but at some point when we need some expansion, we need some additional capital. Okay, in that case, we can borrow the money from the bank, or we can admit a new partner for the additional capital. Okay.
Yes, sir.
So what do you think? Which option is better? To borrow loan from the bank, or additional capital, we admit a new partner?
I think additional capital is better.
Additional capital
Is better.
From partner. Okay.
Yeah.
Okay, good. So if we admit a new partner, okay, so it will result in distribution of profit, means we will get less share in profit. Yes or no?
Yes. Yeah.
So you can say this is disadvantage.
But even in loan from bank, you have to pay loan. So there
Yes,
also money is. I think both are the same.
both are the same. No, actually no. If situation become worse, okay, what we think of our business, business is not going too well. Okay, in that case, if you are suffering from loss, you have to pay interest on that loan. Yes or no?
Yes, sir.
But if business is suffering from loss, you don't have to pay any profit share to your partner.
Yeah.
Okay, so when you are uncertain that what will happen in future, then you admit a new partner, so that if for some time you suffer loss, then there is no problem. You don't have to pay any amount to that partner. Okay, but in
Yes.
case of loan, you have to pay.
Yes.
That's why you can say admission of a partner is more profitable, more beneficial.
Yes, sir. Yeah.
Okay, the second point is knowledge or experience. Okay, in all of these cases, actually, in all these cases, there is a fixed cost related with some other option, fixed cost. If we admit a new partner, there is no fixed cost. That's why partner admission of partner is good, better than this fixed cost option. So second option is knowledge or experience. Now, if you are starting a business, you are operating a business, and there is a person who is knowledgeable, who has better knowledge of this field, then you want to hire that person. Yes.
Yes, sir. Yeah.
Okay, so either you can take him as employee or take him as partner. Okay, so if you take him as employee, then there is still a fixed cost, means either you have profit or loss, you have to pay him salary if you hire him, if you take him as a employee.
Yes, sir.
But if you make him a partner, then you don't have to pay in case of loss. Is that clear?
Yeah.
Good. The third point is fame. Means when a person is famous, then you admit that partner for some benefit to your company for becoming famous. Okay, like Mahendra Singh Dhoni.
Yes, sir.
Yes. So he is associated with some of the companies, a real estate company named Amrapali Group. Okay, so why that Amrapali Group is related with this Mahendra Singh Dhoni, because Mahendra Singh Dhoni is famous. Okay.
Yes. Yeah.
Okay. So that's why they attach their name so that the company will be famous also, and the buyers will purchase their flats. Okay.
Yes, sir.
So this is just for example purpose. Okay. So like this, you admit a partner for their fame also. Like I will hire a famous person for my new company. Like I will hire Salman Khan and you can say Amitabh Bachchan. So we hired these persons to make our business famous. Okay.
Yes, sir.
Now there is still a fixed cost when we make them our brand ambassador, like they advertise for us, then we have to pay some money to them. Yes.
Yes, sir.
But if we make them our partner, then we don't have to pay the advertisement fees because their name is already associated with us.
Yes.
Okay. So the third point is fame. The fourth point is important employee. Actually, whenever a good employee who is going to leave our business, then we approach with some benefit. We approach that employee with some benefit so that they stay in our company. Okay. It is also related with knowledge or experience, the second point. Okay. Because
Yeah.
that employee have good knowledge of our business, also has some experience in our business. That's why we don't want him to leave. Okay. So in that case, we can make him a partner.
Yes, sir.
Okay, so this is the reason why we need a partner. Okay, so when a partner is admitted, we need to adjust our books. Okay, as per the reconstitution concept. So these are the adjustment which is required at the time of admission of a new partner. The first one is determining new profit sharing ratio. Okay,
Yes, sir.
okay, wait. Okay. So the first is determining new profit sharing ratio and gaining or sacrificing ratio. The second is goodwill, reserve, accumulated profit or loss, revaluation, adjustment of capital. Actually, if you missed the previous class, you can see that all the topics that we discussed in our previous class in change in profit sharing ratio are included here.
Yes, sir.
Okay, so if you understand the today's topic, then you will easily understand the previous concept also.
Yes, sir.
Okay, so determining new profit sharing ratio. Let's take an example here, actually, for understanding. Whenever a new partner is admitted into business, okay, so why a new partner wants to join our business? Can you tell me?
To get profit.
To get profit, yes. Very good. Share in profit. And
Um,
this is not the only thing that a new partner will get. So the second,
he- He'll get knowledge about the company, about the business.
actually, that is additional share in assets and liabilities of the company.
Yeah.
Okay, good. Now, uh, for this share in assets and liability, a new partner bring capital. Okay,
Yes.
he will bring capital to the company, or as I said, knowledge or experience to the company, and in return, he will get assets and liability, share in assets and liabilities of the company. Is that clear?
Yes, sir.
Okay. And why we will give him share in profit? For that, he will bring goodwill. Okay.
Yes.
Okay. Now, if he gets share in profit, now let's say there is two partners already, A and B, in the business, and the profit sharing ratio is 3/5 or 2/5. Okay.
Yes, sir.
Okay. So 3/5 or 2/5. Now, if a new partner is admitted, you can say 3:2 also. If a new partner is admitted here, he will get, let's say, 1/4 share. Okay. 1/4 share in profit. Now, just tell me that their old ratio was 3:2. Will their new ratio will change or it will remain same?
It will change.
It will change. Okay. So we need to calculate the new profit sharing ratio.
Yes, sir.
And this 1/4 share, the new partner will get from A and B. Yes.
Yes, sir.
So it means A and B will sacrifice some of their share for new partner so that new partner will get share in profit. Yes or no?
Yes, sir.
Okay. So we need to calculate this sacrifice also. So if a new partner is admitted into the business, we need to calculate the new profit sharing ratio of all partners, means old and new together. We need to calculate all partners profit sharing ratio and sacrificing or gaining ratio of old partner. Okay.
Yes.
Okay. Now, do you know the formula of sacrifice gain? How to calculate sacrifice or gain?
Yeah. New profit share minus all profit.
Yes, the formula for sacrifice is old profit share minus new profit share. Okay.
Yeah.
And for gaining ratio or gain, the formula is just opposite, new profit share minus old profit share. Okay. So
Yes.
in both of the cases, either sacrifice or gain, if we calculate sacrificing ratio and we are using this the formula, and the result is negative, the answer is in negative, okay, then it is gain for the partner.
Yes.
Okay. So if we are using sacrifice formula and the result is negative, then it is gain. If we are using gain formula and the result is negative, then it is sacrifice.
Yes.
Okay. Now there are some situation that will be given in question for calculation of new profit sharing ratio. So you have to calculate according to the given quotient. Okay. That's why there are 2 or 3 cases we need to study as per the information provided in quotient. Okay. These cases are classified on the basis of information given in quotient. So you have to see the quotient and then apply the related case. You
Yes,
can
sir.
see here new profit sharing ratio calculation. What is the given information is profit sharing ratio of old partner will be given. Okay, like if A and B are partners and their profit sharing ratio is 3:2, then this information is given to you in the question. And profit share of new partner means if a new partner is C, his profit share is 1/4. Then these information will be given in quotient. There are no other information related to ratio in the quotient. Only these two information will be given. Okay.
Yes, sir.
Okay. So can you tell me how to calculate the new profit sharing ratio in this situation? Do you know?
So can you repeat?
Do you know how to calculate the new profit sharing ratio in this situation, in this case?
No.
You don't know?
No.
Okay, no problem. So actually, we don't know about this sacrifice or gain. There is only old profit sharing ratio of partners are given. So let's understand the concept. Let's say A and B are partners. Their profit sharing ratio is 3:2. Okay.
Okay.
C is new partner and he is getting 1/4. Okay.
Yes, sir.
So the concept here is you actually don't know the other information. It is not given in the question. So you assume in this situation, you assume total profit is 1. Total profit is 1. Like you assume some figure in mathematics as X or 100. Yes.
Yes, sir.
So you assume total profit is 1. Okay.
Yeah.
Now, in this total profit, you are giving 1/4 to C. Okay.
Yes, sir.
So the balance profit will be available for A and B.
Yeah.
Okay. So the balance profit you need to calculate here. Balance profit share will be 1 minus 1/4. You are deducting the C new share from total profit share so that you will get the balance share for A and B. So 1 minus 1/4, it will be 4. 4 minus 1, 3/4. Okay, is that clear?
Yes, sir.
So now this profit is for A and B. We have removed, we have deducted the C share from total profit, and now we get 3/4 for A and B. Okay, now this will be distributed between A and B. So A share, A old profit share was 3/5 and B old share was 2/5. You know how I have calculated this or written this 3/5 or 2/5?
That is in the question, right?
No. Actually, the question will give you like this. So
Yeah.
it means if you convert it in fraction, you will get 3 and 2. Okay. And then you add both of these ratio 3 and 2, 5. So
Yeah.
it is like this.
Okay, sir.
Okay. So I have get this 3/5 and 2/5. Their old profit sharing ratio. You multiply their old profit sharing ratio with balance share. So it is 3/4. It is 3/4. So 9/20 and 6/20. Yes.
Yes, sir.
And C share is 1/4. Yes.
Yes, sir.
In this case, actually, uh, we cannot convert this into ratio. You cannot convert because it is 9/20, 6/20, and 1/4. So for converting the fraction into ratio, you need the denominator to be same.
Yes, sir.
Okay. So we need this as 20. We have to convert it in 20. So how to do this? You have to multiply the 4 with 5 so that you will get 20, and same on the other side. So if you multiply 5/5 with C share, you will get 5/20. Okay.
Yeah.
If you again cut this, you will see that 1/4 is your final answer. Yes.
Yes, sir.
So there is no change. We have just multiplied with 5 on the numerator side or denominator side both.
Yes, sir.
Okay, so we get 5/20. Now we can convert this into ratio. So we get the denominator as 20. So we will remove the denominator. The ratio will be 9, 6, 5.
Yes, sir.
Is that clear?
Yes, sir.
Okay. So what we have done here, if the old profit sharing ratio of old partners and profit share of new partner is given and there is no other information, then you have to assume total profit of firm as 1. You will deduct the new profit share from that one, and the balance will be distributed between old partners in their old profit sharing ratio. So this balance is distributed between A and B in their old profit sharing ratio, that is 3/5 and 2/5, and you get 9/20 and 6/20. Okay, and for converting it into ratio, you need denominator to be same so that you can convert it into ratio.
Yes, sir.
Okay, the second option, the second case. The second case is when old ratio and sacrificing ratio of old partners and profit share of new partner is given. Okay.
Yes, sir.
So it will be given as this. Let's say A and B, their profit sharing ratio is 3:2, and there is a new partner C who is getting 1/4 share. Okay.
Yes, sir.
And there is one more information in this case. In first case, this information is only given in the quotient, but in second case, there is one more information, that is sacrificing ratio. Sacrificing ratio.
Yes.
Sacrificing ratio is 2:1. Let's say 2:1.
Yes.
Okay. Their old ratio is 3:2, but sacrificing ratio is 2:1. Now, this 2:1 means A and B is sacrificing this 1/4 in this ratio. Okay, so A sacrifice and B sacrifice. 1/4 into 2/3 and 1/4 into 1/3. So it is 1/12 and 2/12. Okay. This is sacrifice.
Yes.
Sacrifice of A and B. Now the formula for sacrifice was old ratio minus new ratio. So if you want to calculate new ratio, the formula will be old ratio minus sacrifice.
Okay.
Now old ratio was 3/5 minus 2/12, and for B it is 2/5 minus 1/12. So A and B, it is 60, 36 minus 10, 26/60, 60, 24 minus 5, 19/60, and the C share is 1/4. So we need 60 as denominator, because A new ratio is 26/60 and B new ratio is 19/60. So we need 60 as denominator. So we will multiply it with 15. So we will get 15/60. New ratio will be 26, 19, and 15. Okay.
Yes, sir.
So this is our case 2.
Yes, sir.
Okay. Now case 3. There is one more case where fraction will be given. Okay. it will be given like C is getting 1/3 of A share and 1/5 of B share. Okay, this is the case 3 where old profit sharing ratio of A and B is given, that is 3:2, and you will be given this information that C is getting 1/3 of A share and 1/5 of B share. There is no information about new profit sharing ratio of C or A and B. Okay, so these information will be given. Now, how to calculate the new ratio here? You have to multiply the A share with this sacrifice. Okay, so A sacrifice and B sacrifice. 2/5 and here 3/5 into 1/3. So it is 1/5 and 1/5 it is 2/25. Now, A new share and B new share and C new share. We need to calculate all these, all three. So A share was 3/5 minus 1/5. B share was 2/5 minus 2/25. And C share will be adding these two sacrifice. 1/5 plus 2/25.
Yes, sir.
So you will get here 5, 3 minus 1, that is 2/5. Here 25, 10 minus 2, 8/25. What happened here? Actually, 3, 3, 3/25. 1/3 share of 25, 5 plus 2, 7/25. Okay, so denominator of B and C is 25, but A is 5. So we will multiply it with 5.
5.
5/25. Oh, sorry, 10/20. Okay,
Yes.
so the new ratio will be 10, 8, 7.
Yes.
So these are the determination of new profit sharing ratio in this chapter. So do you have any doubt in this concept?
Okay. Clear.
So you need to remember the cases, okay, because the question will be different in each scenario. So if you remember the case, then you can easily solve the question by following these steps. First case is when you have only two information, the old profit sharing ratio of old partners and profit share of new partner. Okay. In second case, there is three information: old profit share sharing ratio of old partner, profit share of new partner, and sacrificing ratio of old partners also.
Yes.
And in third case, there is only two information: the old profit share of old partner and sacrifice of old partners. Okay, there is no information about new profit share of new partner. So there is only two information. So if you remember these cases, then it will be easy for you.
Yes.
Okay, after these, there is this concept of goodwill. So I already told you how to calculate the goodwill, how to evaluate the goodwill. There are three methods we have discussed in the chapter of goodwill. So those three you need to know.
Average profit.
Yes, average profit, super profit, and capitalization.
Yeah.
Okay, very good. Now, goodwill. So I told you here that if a new partner is admitted into the business, he gets two things. The first one, share in assets and liabilities, and the second one is share in profit. Okay.
Yes.
For share in assets and liabilities, what he brings?
Capital.
Capital. And for share of profit?
Goodwill.
Goodwill. Very good. So share of profit is given by old partners. So if he is bringing goodwill for share of profit, then he has to give that money to the old partners because they are sacrificing for the new partner. Yes or no?
Yes, sir.
So it is like compensation from new partner to old partners.
Yes, sir.
Very good. So you can see here the journal entry first for capital and goodwill brought by new partners. Okay.
Yes.
Okay. So sometime a new partner brings their capital and goodwill in cash form because he has cash. So he brings cash in the business, but sometime he don't have enough cash. Okay. In that case, he will bring some assets along with cash.
Yes, sir.
Or it can be also the scenario where he only brings assets, no cash.
Yes.
So in all these situations, you can pass this journal entry. You can see cash account debit. If he brings cash, then cash account debit. If he brought assets along with cash, then cash account debit, assets account debit. But if he only brings assets, then assets account debit, you don't have to write cash account debit.
Okay.
Okay. So cash account debit, assets account debit, to new partners capital account, to premium for goodwill account. So you can see he is bringing two things, the capital and goodwill, and he can bring it in any form, either cash or assets. So the journal entry is cash account debit, assets account debit, to new partners capital account, to premium for goodwill account. Okay.
Yes, sir.
Now, as we already understood the concept that goodwill is compensation for profit share. So if the new partner is bringing premium for goodwill, then it will be distributed between old partners. Yes or no?
Yes, sir.
And how it will be distributed? Can you tell me?
Profit sharing ratio.
Profit sharing ratio? Which profit sharing ratio? The old one or new one?
Old one.
Old one. But old partners is not giving the profit share to new partner in their old profit sharing ratio. Yes or no? Should I repeat the question?
Yeah.
Okay. So old partners are not sacrificing their profit share for new partner in old profit sharing ratio. Yes or no?
Yes.
Actually, you don't understand the question.
No, I didn't get it. They
Okay.
sacrificing it in the old sharing ratio?
Actually, the question is, let's say A and B are partners. Their profit sharing ratio is 3:2. Okay. New partner is admitted into business. He is getting 1/4 share. Okay. And A is sacrificing this 1/4 only. B is not giving anything. A is sacrificing 1/4 share.
Yes, sir.
Okay. So goodwill should be paid to A and B both, or only A or only B?
I think only A because he's
Because he is sacrificing 1/4. B is not giving anything. Yes.
yes, sir.
But if goodwill is distributed in old profit sharing ratio, then goodwill should be distributed in this ratio. Yes or no?
Yes, sir.
So
I think it's
what do you think?
when B will get it.
Actually, A and B will not get the goodwill in their old profit sharing ratio. Goodwill is distributed, goodwill brought by new partner is distributed in old partners in their sacrificing ratio.
Okay.
Okay.
Sir.
If someone is sacrificing for new partner, then only he will receive the goodwill. Otherwise not.
Okay.
So B is not sacrificing anything for C. That's why if C brings goodwill, then it will be only paid to A.
Yeah. Yes.
So that's why premium for goodwill is always distributed in sacrificing ratio. You can see here, premium for goodwill account debit to old partners capital account, sacrificing ratio.
Yes, sir.
Now you can see here, I have written also new partners capital here. If we are distributing goodwill, then why I have written this new partners capital in this entry?
Because he's bringing both like assets, share in assets and liabilities, and share in profit. So he's bringing goodwill on that.
But sharing assets and liabilities, for that he is bringing capital, and capital is property of obviously partner. It cannot be distributed between old partners. Capital cannot be distributed.
Okay.
So premium for goodwill is distributed between partners, and if let's say the share of new partner was 10,000 and he only brings 6,000, okay?
Can you
In
repeat?
that case, actually, the share of goodwill of new partner is 10,000. Means he has to bring 10,000.
Okay. Yeah.
But he only brings 6,000. So what will happen here?
I think they will take the rest from the capital.
Yes, we will deduct the rest from the new partner's capital. That's why new partner's capital account is debited here. Okay.
Yes, sir.
Understood the concept?
Yes, sir.
Very good. The third one is for withdrawal of share in goodwill by old partners. Now, sometime when a new partner brings goodwill into the firm, okay, old partners decide to distribute it and withdraw it from the business. They don't want to keep the goodwill amount into the business. They want to withdraw it for their personal use. Okay, because it is their money, so they can easily withdraw it.
Yes, sir.
So the third entry is for withdrawal of share in goodwill by old partners. Okay, when they decide to withdraw the amount. So old partners capital account debit to cash account. So these three entries are related with goodwill, which is brought by new partner.
Yes.
Now, there is a situation, sometime it is given in the question, that the new partner has given or paid the premium for goodwill directly to the old partner. Directly. Okay. So the new partner is has brought the goodwill and paid it to the old partner directly. There is no involvement of firm partnership form in that transaction. So in that case, what should be done?
Sorry, I didn't understand.
You didn't understand the question. Okay, so I told you that there is A and B, two partners. A new partner is C, and C share of goodwill is paid by C to A and B directly at their home. Okay,
Okay.
so is there any entry required for that transaction or not?
Uh, I think so because he is paying
Entry,
the goodwill, right?
yes. He is paying the goodwill, yes.
I think there is an entry then.
Okay, we will pass the entry.
Yeah.
Actually, no, we don't have to pass the journal entry here because new partner is paying it directly. Let's say, okay, we are doing accounting in the books of the firm.
Yes, sir.
Books of firm. Okay, so we are not doing it for their personal use. We are doing it in the books of firm. So no partner is involved here. We are doing the transaction as per the firm's point of view. Okay, so let's say these are two old partners. C, new partner. Here it is firm. So if any transaction goes through this route, okay, if any transaction happens through this route, then we have to pass entry. But here what is happening? C is paying the money directly to A and B. There is no involvement of firm here. Okay,
Yes, sir.
so if there is no involvement of firm, then why firm should record that transaction?
No, it won't.
Okay, so it does not required in this case
No, it doesn't because it's not involved. They
because
don't.
firm is not involved. A transaction is directly C is paying to A and B. So if firm is not involved, then firm will not pass any entry.
So no entry.
Okay. So this is how, if goodwill is paid privately, then we don't have to pass any journal entry for that transaction. So this is given here in the form of notes. If premium is paid privately, then no entry required. Okay.
Yes, sir.
Next is, if there is any existing goodwill, then it will be written off in old profit sharing ratio. Means I already told you this in previous class, change in profit sharing ratio, that existing goodwill should be written off in old profit sharing ratio. Existing goodwill means goodwill which is shown under the balance sheet.
Okay, sir.
Okay, so we have to write it off. We have to like depreciation. You charge depreciation on assets.
Yes, sir.
So in the same manner, we have to write off the goodwill. For that, the journal entry is partners capital account debit to goodwill account.
Yes, sir.
So premium for goodwill is a different concept, and goodwill given in balance sheet is different concept. Okay, so you have to remember these two are separate.
Yes, sir.
Okay, just wait 1 minute. Okay, so if there is any existing goodwill, then it will be written off in old profit sharing ratio. Okay, now the last concept in this goodwill part is hidden goodwill. Okay, means there is an existing goodwill, but it is not shown in the question, and we have to find it.
Yes, sir.
How we are going to find the hidden goodwill? We have to see a new partner is bringing his capital. Let's say he is bringing 1 lakh as his capital.
Yes.
C capital. And his profit sharing ratio is 1/4. Okay. So if he is bringing 1 lakh as capital for 1/4 share, then total capital of firm should be how much?
1/4 of 1 lakh.
1/4 of 1 lakh, that is 25,000.
Um, um,
Just
whatever.
think about it. He is getting 1/4 share, means 1 out of 4 share. Okay.
Yeah.
And he is paying 1 lakh for that 1 share. So how much the total capital should be?
4 lakh.
4 lakh. Very good. So it is 4 lakh. Total capital should be 4 lakh. Okay.
Yes.
And A and B capitals are 150 and 1 lakh. Okay.
Yes.
So now the total capital is 1,50,000 plus 1 lakh of B and plus 1 lakh of C. Yes.
Yes, sir.
A, B, and C. The total capital is 3,50,000. Yes or no?
Yes, sir.
But as per the profit share of new partner, the total capital should be 4 lakh. But it is 3,50,000 in actual. So the hidden goodwill is 50,000. Okay.
Yes, sir.
So this is your hidden goodwill. And 50,000 is total hidden goodwill actually. Now in this, you have to calculate the new partner share, that is 1/4. So 50,000 into 1/4, it is 12,500. Okay.
Yes, sir.
And if it is hidden, it means it is not brought by new partner. So this goodwill will be adjusted from his capital or current account.
Yes.
Okay. So the entry will be new partner's capital account debit to old partner's capital.
Okay, sir.
So this is the concept of goodwill. Now, general reserve. Do you remember general reserve concept? Of in previous class, we have already discussed this.
And,
Can you repeat? Actually, I'm not able to listen your voice.
general reserve. I think I do. I'm not
You
sure.
don't remember this. Okay, no problem. Actually, the concept is, I have written this. Okay, wait. Yes, you can see here the accounting treatment of reserves, accumulated profit or loss. If at the time of admission, if there is any balance of reserve, accumulated profit or loss is given in the balance sheet, then it should be distributed between old partners in their old profit sharing ratio. Okay.
Yes.
So the profit reserve will not be distributed between new partners. Okay.
Hello, sir.
Yes.
Sir, my
Actually,
network.
you were disconnected actually.
Yeah, I disconnected. My network is slow.
Okay. So I'm saying whenever there is a balance of reserves, accumulated profit or loss given in the quotient or balance sheet, then it should be distributed between old partners in their old profit sharing ratio. It will not given to the new partner. Okay.
Yes, sir.
So you can see for first entry for transfer of reserve, general reserve account debit, workman compensation reserve, investment fluctuation reserve, profit and loss account. Whatever the balance of reserve is given in the quotient, if it is pre-reserves or it is obviously created from revenue profits, then it will be distributed between old partners only, not new partners.
Yes, sir.
So that's why you have to distribute it to partners capital, old or ratio. Okay. So these are profits. These are profits now accumulated loss for transfer of accumulated loss. You can see if we when we are distributing profit, the partners capital account is credited here. But if we are distributing loss, then partners capital account is debited here. So partners capital account debit to profit and loss account to deferred revenue expenditure account. So this is the entry for distribution of reserve, accumulated profit or loss. Okay.
Yes, sir.
And there is this concept of workman compensation reserve. Actually, when the video will be uploaded, you will see this part actually. Okay. Because there are some other concept we need to discuss today. So you will see the video of
Sir, your voice
this.
is break.
Yes,
Can't hear you.
my voice is not clear.
No, no, my network is slow. I can't. Your voice is breaking.
Okay. So
Yes. Now it's fine.
should I continue?
Yeah, yeah. Now it's fine.
Okay. So you have to see the video, okay, of previous class. for workman compensation reserve and investment fluctuation reserve. Okay, I explained these two concepts in that chapter. Okay, so you will see the video. If it is not clear to you, then I will explain it to you.
Yes, sir.
Okay, so we need to discuss some other concept. It is also related to reserves. Okay, so please see the video first, then we will discuss. So this is for transfer of reserve, for transfer of accumulated loss. This is how we distribute the accumulated profit or loss in the balance sheet.
Okay.
The next concept is a revaluation. I think uh, revaluation you already studied in detail.
Yeah.
You know the concept of revaluation.
Yeah.
Okay. Can you tell me why we do revaluation?
Uh, like to see the change, whether it has, you know, increased or decreased assets or
Okay. Okay. So the question which is related to revaluation for multiple choice question, actually it is asked that which item will be debited or credited in revaluation account. Okay, you will be given an asset name or liability name. Okay, and then you will be given the information about increase or decrease in value. Okay, and it will be asked from you that it should be debited or credited. So you have to choose option from the given option. Okay, so this type of question is asked generally for the revaluation concept. Okay.
yes.
Okay, so the journal entry, you should remember, for understanding journal entry, do you remember the concept of nominal account? Because the revaluation account is a nominal account. Okay, so if you remember the concept of revaluation, concept of nominal account, then please tell me so that I can continue.
Nominal account is the transactions of a whole year, right?
No, no, rules of debit credit related to nominal account.
Is it in debit, increase, credit, decrease, like that?
Okay. Actually, nominal account rule is debit all expenses and losses, credit all income and gains.
Yeah.
Means all the expenses and loss is debited and all the income and gains will be credited. So if the value of an asset is increasing, it is gain or loss for the company, for the firm.
Gain.
Gain, obviously. So it will be credited in revaluation account.
Yes, sir.
Okay, so the amount that should be written in revaluation is difference, change in value, not old value, not new value, only change in value. Okay, increase or decrease.
Yes, sir.
So let's say if the asset value is 10,000 and it becomes 12,000, then we will credit the asset account by 2,000.
Yes, sir.
So this is how we pass the journal entry. So the entry will be if asset value is increased, then assets account debit to revaluation account, because revaluation, this is profit for the firm. That's why revaluation is credited here. If asset value decreased, then revaluation account debit to assets account.
Yes, sir.
So you have to understand there is profit or loss for the firm. If you understand that, then if there is loss, then the revaluation account will be debited in journal entry and the account will be also debited. In debit side, we have to write for any decrease or loss. Okay.
Yeah.
So actually, we have format. Just wait 1 minute. Okay. You can see here the increase in value of assets account debit to revaluation account, increase in liabilities, revaluation account debit to liabilities. So this is how we pass the journal entry. Okay. You can see here, actually it is question. Okay. So to land and building 20,000, okay, to stock 3,200. It means actually it is written on the debit side, so that it means the land and building value is decreased by 20,000 and the stock value is decreased by 3,200. Okay.
Yes, sir.
Same with the creditors. On the credit side, it is decreased by 1,200. Why I am saying that creditors is decreased by 1,200? Because if it is written in the credit side, it means it is gain for the company. Yes.
Yes, sir.
And if it is gain, it means if creditors value increases, then it means it is loss for the firm. And if the creditors value decrease, then it is gain for the firm.
Yes, sir.
So this is your revaluation account format. Actually, you have to write increase in assets on the credit side, increase in liability on the debit side, decrease in assets on the debit side, and decrease in liability on the credit side. If there is any unrecorded assets or liability, then unrecorded assets will be written on the credit side and unrecorded liability on the debit side. Okay. After that, we balance the account and transfer the balance to partner's capital account. Okay.
Yes, sir.
So this is how we solve our revaluation account concept. Is that clear?
Yes, sir.
Okay. You have to remember one thing also, that in a revaluation account, we will never write goodwill. Okay. Goodwill is never transferred to revaluation account.
Okay, sir.
Okay. Sometime you will be asked in examination that goodwill can be transferred to a realization account or not. So what will be your answer?
It won't be, right?
Your answer is
No. You
it
asked
will not.
goodwill will be there in revaluation, right?
A realization account,
Yes, sir.
not
Yeah,
revaluation.
yeah, yeah.
Actually, the account is different.
Realization.
So
Yeah,
it is confusing.
yeah.
A
No,
realization account is prepared at the time of dissolution of firm. Okay.
yeah.
And revaluation is prepared at the time of reconstitution or admission, retirement, death, or change in profit sharing ratio. So in revaluation account, we never write goodwill, but in realization account, it is written.
Yes.
Okay, so you have to remember this concept that in realization account, goodwill is transferred, but in revaluation account, we will never write the goodwill.
Yes.
Okay, so this is our revaluation concept. The one more concept is here, that is adjustment of capital. adjustment of capital. Now, do you know what is adjustment of capital?
If capital is not.
Actually, I think we will not be able to complete. It is a little practical type concept. Okay, so we need more time for that. Okay, so
Yes.
I'm explaining it to you right now, but the practical concept we will understand in next class.
Okay.
Okay, so adjustment of capital. Do you know anything about it?
Is it like if the capital is not enough, you adjust it with goodwill?
Yes, you can say a little bit. It is related to that concept. Yes, actually, whenever a new partner admitted into the business, okay, or there is a change in profit sharing ratio between partners, then sometimes partners think that if we are changing our profit sharing ratio, then we should also change our capital or not. Yes or no?
Yes.
Generally, whenever there is change in profit sharing ratio, let's say there is three partners, or there is three partners, A, B, and C. Okay, and their profit sharing ratio was 3:2:1, and their capital was 5 lakh, 2 lakh, and 1 lakh. Okay,
Okay.
now C and B approach A and tell him that we should share the profit and loss in equal ratio, that is 1:1:1. Okay,
Yes, sir.
so if B and C approach A for this, then A will say that I am getting 3/6 share in profit. Yes, 3/6, 3, and total of these three is
Yeah.
6. So 3/6. Okay.
Yes.
So A will say that I'm getting 3/6 for which I have invested 5 lakh into the business. But if we are going to share the profit equally, then we should invest the amount equally also.
Yes, sir.
Yes.
Yeah.
So A will say that we will invest 3 lakh each. Yes or no?
Yes, sir.
3 lakh each. So C has to bring 2 lakh more. B has to bring 1 lakh more, and A will withdraw the 2 lakh.
Yes, sir.
So that's why we adjust our capital to match the profit sharing ratio. Is that
Yes.
clear?
Yeah.
Okay. This is the concept we discussed in hidden goodwill.
Yeah.
Okay. So when a new partner is admitted into partnership form, okay, there can be two situations for adjustment of capital. There can be two situations. The first situation, that A and B are partner and C is new partner. Yes,
Yes, sir.
there may be a different situation also, like uh, there is three partners, A, B, and C. Actually, I'm taking all the examples for A, B, and C. Okay, so let's change the example. Uh, let's say A, B, and C are partner, and there is a new partner, D. Okay,
Yes.
so there may be situation where D will say to A, B, and C that you have to keep. If I am bringing the capital, then you have to uh, keep the keep your capital in the same ratio. D will say this. Okay, like if D is giving 2 lakh rupees, 2 lakh rupees for 1/5 share, 1/5 share. So D can say that if I am giving 2 lakh rupees for 1/5 share, so total capital of the firm, including my capital, total capital of firm A, B, and C, sorry, not A, B, and C, A, B, C, and D combined should be 10 lakh. Yes or no?
Yes.
Okay. So D capital is 2 lakh for one share in 5. So total capital should be 10 lakh, and this should be distributed between A, B, and C. Okay.
Yes, sir.
So this is the first concept when the old partners' capitals are adjusted as per new partner capital.
Yes.
And the second concept where A, B, and C has 15 lakh as capital. Okay. And D is admitted for 1/5 share. So what do you think? A, B, and C will tell D for how much capital? To bring how much capital?
So the total has to be 10 lakh or
No, actually, the first example is done. You don't have to consider this now. Okay, the question is changed. So A, B, and C combined capital was 15 lakh, and D is admitted for 1/5 share. So how much capital D should bring?
the rest? How much is so the total should be 15 lakh,
Total should be 15 lakh?
right? That
No.
D should also bring the equal amount, I guess.
Equal amount? How much? 5 lakh? Let's see. A, B, and C combined capital is 15 lakh. D is getting 1/5 share. 1/5 share, it means A and B, oh, sorry, A, B, and C combined share will be 4/5. You know how it is calculated?
Yeah, the total.
The total profit share is 1. And if we give 1/5 to D, then we will get 4/5 for A, B, and C. Yes.
Yes, sir.
And for this share, they are investing 15 lakh. Okay. So whenever you have to calculate the total capital, then what we do is multiply with reciprocal of share. Reciprocal means you have to just multiply with opposite of this fraction. That is 5/4. Okay.
Yes, sir.
So 375. 3,75,000 into 5, it is 18,75,000. Okay.
Yes.
And the capital of A and B and C is 15 lakhs. So the balance will be brought by D, that is 3,75,000. Okay.
Yes, sir.
You get it or not? If you
Yes,
have
sir.
confusion, you can ask.
No, I understood.
Okay, very good. So the total capital should be 18,75,000 as per this concept, and their actual capital is 15 lakh. So D will bring the balance amount 3,75,000. Okay.
Yes.
So we'll discuss this adjustment of capital again in our next class. If you have any doubt in today's topic, you can ask questions.
No, sir, it's clear.
Okay, so when the video will be uploaded for previous class, please see that and watch the video, and then ask any question if you have.
Yeah. Okay. Thank you.
Okay, thank you. Bye-bye.
Bye, sir.